to 3.5% with another rate hike expected soon. Orders for durable goods, February down big, 2.5%. Construction spending, February down big. Factory orders, February down moderately, 1%, the first drop in 6 months. And the stock market, as noted, in turmoil. Question: how do you resolve this anomaly? The stock market plunges while the general economy surges. Freddie, bullish, bearish, bonds.
It's got to be one or the other. No, look, the fact is the stock market is people's guess about the future, where they think the economy is going to be 6 months from now, a year from now, interest rates, economic growth, inflation, and so on. And judged by that, there is some pessimism about the future. But all these figures you've cited about the economy are the present. Right now, the economy is good. But the guess people are making is that because of what the Clinton administration is doing on trade, and remember when Mickey Cantor, the special trade representative, announced his rejection of the new Japanese trade proposal, the stock market dropped another 30 points immediately because of trade, because of interest rates going up, and so on. People are skeptical about the future. They know that the Fed's easing over the years will expire this year, and taxes are going to go up, and the economy is going to slow.
Mortimer, welcome.
Thank you. The biggest factor, I think, is the increase in interest rates. That's what's causing the stock market to go down, and that, frankly, is going to have a great deal to do with the economic future of this country. Long rates have now gone up to where they were before the Clinton fiscal program went through, and the Clinton people took credit for lower rates because of their fiscal program. Alan Greenspan has now blown that right out of the water. And you now have longer-term rates. It's going to affect everybody with variable rate mortgages. It's going to affect investment. It's going to affect the housing industry. So it is going to affect the future of the country. And I must say, I think it is completely misplaced for the Fed to have raised rates. It's the Fed that created inflationary expectations, because they sure don't exist in the economy, and it doesn't look that they're going to come about for all of this year.
Jack.
Could you do all those figures again in case anybody is still awake?
Yeah,
I think the mistake you make in the premise of the question is that there's some logic in the stock market. In the broadest sense, there is, and Mort just talked about it. I mean, if the traders think more money is going to go into high-interest instruments, they're not going to buy stocks, obviously. But aside from that, the fact is, and we've seen this time and time again, the traders on Wall Street are so pitiably naive about what constitutes a real development in Washington or in the world, and they get spooked about anything. There isn't any particular logic to it. I don't think that's a particularly big drop at all. And when you consider where it came from and how fast it got where it was.
Jack, you ready for the Easter egg roll on the White House lawn? Have you got your bunny suit?
I have indeed, and I know where the big chocolate bunny is.
Mort, what's the story? Do you see an anomaly? Jack says there's no anomaly because you can't take the market seriously.
Well, no, I think that this is probably a correction. I think a correction was probably due. The market was flying sky high. A lot of people who were skittish were late in, get early out. There are other factors, yen, dollar differentials and stuff like that. People had to pull money out of the stock market. I think fundamentally, Clinton is right that the economy is fundamentally strong. The bond market hates it when the economy is strong. It gets nervous about inflation and bids up interest rates. I think that if there is no sign of inflation, and the figures you cited show that things will settle down again. I don't see why they shouldn't.
All right, we have mentioned here some of the factors that may be contributing to this unsettled market. We'll call it the market rattlers. These are the factors that seem to be rattling financial markets. 1, fears that interest rates will go higher. 2, trade wars with Japan and China, so to speak, with China. The assassination of PRI candidate Luis Donaldo Colosio. 4, crisis in North Korea. 5, unemployment now at 6.5%. And 6, Whitewater. We didn't do any of those contribute to the present market stability?
The first two do. Those are important. Interest rates and trade. Look, markets fear a trade war.
What about Whitewater? Is Whitewater doing any of this?
No, come on.
Whitewater had effect on one day when there were all those incredibly ridiculous rumors about how Vince Foster was killed, and I had people from Wall Street calling me up and saying, is it true that Hillary Clinton killed Vince Foster? I mean, people actually, as Jack says, had the wit or lack of wisdom to believe that might be true.
There's one factor that you didn't add there, and it's not a huge factor. And I tried to check this out with the Council of Economic Advisors, and they're poo-pooing it, but I still think that April 15th is a factor.
People are going to look at, on April 15th, they're going to look at what they owe on account of the increased taxes of the Clintons have imposed that they didn't have withheld last year because it wasn't required, and they're going to say, my God, I got to get some money, and they're going to get it out of the stock market.
This is an Alan Greenspan market. This is a market that is spooked by the possibility of higher interest rates. When you have higher interest rates in the bond market, yields on stocks to be competitive have to go down, which means go up, which means prices go down.
It was
this
also
is principally an Alan Greenspan market.
Also an Alan Greenspan recovery in 1993 that the Clinton administration was taking credit for. It had nothing to do with their budget.
Oh, we don't have time to discuss
Let's get
that
out.
one.
The President of the United States and his whole administration say that the fundamentals of the general economy are strong, they're stable, they're rooting themselves more every day, the economy is rolling ahead forward. I want to know from you, on the basis of the skittishness of the market and anything else you see, whether you would modify what the President says, or are you in general agreement? Freddie the Beetleborn.
Well, I think right now the fundamentals are strong. But I think by the end of the year we're going to see a slowing economy, and it'll slow next year and the year after that because taxes have gone up.
How
and
slow is
interest
slow?
rates are going to be higher. You know, down to 2%, 1%.
Mort, what do you say?
I think the economy is strong. I don't think it'll go down in the way that Fred says, unless the Federal Reserve once again misjudges the economy.
You know the Fed is going to raise the rates to 4%.
How much and how fast they do it is going to be the question. I think it's a mistake that they did what they did. Oil prices are down. It's a big factor in keeping inflation low. I don't understand what they're doing, and I think they're going to really spook the economy and jeopardize the economy.
But a generally robust economy.
Yes.
What do you say, Jack?
I mean, I think you can't argue with the overall figures. The economy is stronger than it was a year or so ago. Unless you were one of the 9 million Americans who was either unemployed or underemployed, it's not so damn good for them.
What do you think?
Growth will modulate, obviously, from 7% last year to in the 3s this year. But, you know, that's pretty good. For this year, it's reasonably strong growth, and I think Clinton gets the political benefit of it.
I think Mort, again, has lurched uncontrollably into a good appraisal. And in fact, both Mort, you're both wearing almost the same ties. Mort to the north of me, Mort to the south of me. Why, I'm mortified. Issue 2, Whitewater Chronicles, Week 6, item, Hillary the Hot Commodity. In October 1978, 1 month before Bill Clinton, then Attorney General, was elected governor of Arkansas, Hillary Clinton, at age 29, invested $1,000 in the commodities market, trading in cattle, copper, soybean, sugar, hogs, and lumber. Within 10 months, that $1,000 turned into a profit of $100,000.
The likelihood of turning an investment of approximately $1,000 into a $100,000 gain in the futures market for an inexperienced and unsophisticated investor is not very likely.
Others have extended Wilmer's unstated assumption, namely that Hillary was trading essentially with someone else's money. Quote, normally, commodities specialists said an inexperienced investor with such limited assets would not be allowed to run the risks Mrs. Clinton did unless she had the backing of and perhaps financial guarantees from a wealthy backer. So noted reporters Broder and Fritz for the LA Times. So Hillary's success may have less to do with her luck than her connections. Besides that possible mystery wealthy backer, there was also James Blair, Hillary's friend and legal counsel for Tyson's Food, one of the largest companies in Arkansas, and Hillary's broker, Robert Redbone, who had previously worked for Tyson's over a 13-year period. In 1979, Bone was banned from trading for 3 years and fined $250,000, a then record amount for, quote-unquote, switching.
Essentially, the broker she was using, Mr. Bones at Repco, was charged with switching trades, giving profitable trades to some customers and allocating unprofitable trades to the less fortunate.
Switching, by the way, is grossly illegal. USA Today tied all the loose ends together thus, quote, more importantly, both lawyer James Blair and broker Robert Redbone had ties to Tyson Foods, Inc., the world's largest chicken processor, and an Arkansas-based firm that later benefited during Bill Clinton's governorship. The circumstances rightly raise questions about whether the events were connected. Question, is there more here than meets the eye, or is there less to this transaction? Mort Zuckerman.
Well, I can break on this program the news that the secret backer for Hillary was Elvis Presley. Now, I've not been asked to, but since Look, you know, I think it is easy to read into these things. I just tell you that I think it's also unfair to read these kinds of interpretations into what has happened. I don't think there's any evidence to support that. And I'll tell you, there are a lot of people who are playing in that game, particularly in a essentially agricultural state like Arkansas, who knew what was going on in that market. Bear in mind, those were highly inflationary years. Particularly the cattle futures market went up 50 or 60% in that 10-month period. And a lot of people were playing that game. And the people who supposedly were advising her did not get out when she got out and lost hundreds of thousands of dollars in the next several months. So, I mean, I think there's a little bit too much overinterpretation to what those facts are.
The reason people are so suspicious of this is that the level of disclosure by the Clintons has been so skimpy. They didn't release anything until after the New York Times ran a story, and then Newsweek claimed wrongly, I guess, that no money was put up. Now, all we get are these monthly reports. There's no check written by Hillary, no canceled check saying, here's how much I put in. There's no listing of the transactions themselves. So it raises all these questions, whether there was switching involved, whether they put up any money or not. Who knows? But their level of disclosure, which they brag about, does not answer those questions.
Jack is in pain. Now, will you let Jack speak, please? Go ahead, Jack.
Good God, Fred. I think you got to, well, the first point you got to make is this: that if Hillary Clinton did this on her own, she ought to be going to Pimlico, betting on horses. That's for sure. I think the basic question which we are avoiding, and the one that the press is avoiding, all of us collectively, what in the world does this have to do with anything? We have a right to look at Bill Clinton's conduct in office in the presidency. We have a right to look at that of his staff. That's obviously a legitimate area of inquiry. It's a legitimate area of inquiry to look into Whitewater's connections with Madison Guarantee, because it was a bank insured by the taxpayers. It was a $60 million taxpayer loss. On the failure of that bank, we can make no such connection to Clinton's commodities trading. It has nothing to do with those things. It is totally...
What about the fact that Bill Clinton at the time was Attorney General, and within 1 month from where she undertook the trade, which continued into the time when he was governor, he was governor?
That is, unless you have some evidence that Bill Clinton, as Attorney General...
Wait, just a second. This is, it is not legally...
No, the nub seems to be...